Good afternoon and welcome to our webcast entitled Your CARES Act, PPP, and SBA EIDL Questions Answered. Thank you very much for being with us today. My name is Lori Shapiro and I'm the employment attorney with Pro Bono Partnership of Atlanta. And in just a few minutes, I'll introduce Robin Miller, who is our Senior Corporate and Tax Counsel and who will be the one principally sharing information with you today. First, let me tell you a little bit about Pro Bono Partnership of Atlanta for anyone who doesn't already know. Pro Bono Partnership of Atlanta is a nonprofit, and we provide free legal services to other nonprofit organizations that serve the poor or disadvantaged in the community. If you are not already a client and would like to apply for our services, please go to our website at www.pbpatl.org. And you can find the request for legal assistance as well as lots of other resources on our website. Today we're going to talk about the CARES Act, PPP and EIDL loans. If you have already submitted questions to us, then those questions are most likely incorporated in the presentation that Robin is going to give today. If you have additional questions as we're going through the material, please feel free to post them in the chat and we will address them at the appropriate time during the presentation. Please be aware that this presentation is directed to 501c3 organizations, and also that we cannot and will not be giving you specific legal advice today. This webcast is for informational purposes only. And with that, let me introduce you to our wonderful senior tax and corporate attorney, Robin Miller. Thank you so much, Robin, for your help today and for the information that you're going to share.
Thank you, Lori. Lori's going to be helping me with the questions, so I very much appreciate Lori's assistance and her wonderful introduction. I want to start by saying to everyone that everything is changing constantly. And the normal rules required to approve regulations at the federal level have gone out the window. There was a law that was passed, the CARES Act, and then there was the implementation. And interim final rules were published at 12:30 a.m. Thursday night of last week, really Friday morning. Things are still constantly changing, and the government, honestly, I think is doing its very best to make this work. You've got the U.S. Treasury Secretary, the SBA Administrator working directly with the White House and congressional leaders to try and make this all work. They don't want to go back to Congress and have to pass more laws about it. They don't want to adjust them. They're just going to move forward and try to help as many people and organizations and businesses as they can. I know it's a very stressful time for everyone. I know everyone is in need. This is just not an easy time period for anyone. And no one could have anticipated any of this, but I do think everyone's trying to do their very best. I'm going to tell you what we know right now, what I know, what I've learned. It may change tomorrow. And some of the things that we think should happen, banks may do it differently, or the government may end up doing it differently. And we're all just going to have to kind of be patient and hope that it's all going to work out. And I do believe that it will. So what I want to do today, because we've sent you in the notice, we sent you our articles on these subjects. And we even sent you a couple webcast links that Barnes and Thornburg did that were very good on both of these topics. My goal is to really just kind of give you an overview of some of the main issues, talk about some of the things I've learned, and then try to answer some of the common questions we've been getting on that subject. So I'm not going to get into every detail of these acts or these specific programs. I do want to first mention the Families First Act. And the reason I want to mention it is because if anybody has employees who are taking FMLA because of a child who's out of school, or paid sick leave through Families First, you should be getting a payroll tax credit through that program. And you should not be double dipping and using or applying the money from that to the same employee through Paycheck Protection. So the first thing that you have to use if you have someone in that situation taking FMLA or paid sick leave is you must use that payroll tax credit through Families First to cover that person's salary or employee or payroll costs. And that payroll tax credit is a wonderful credit. And our article details how you get that. Now, there's some details that still need to be worked out. And the IRS has until really July 31st to figure out how they're going to know that you took that money and used it for those costs instead of submitting it to them. And I expect that there will be some additional paperwork with your 941 or something to address those issues. But I'm sure the IRS is working on that along with all the other things that they're working on. We're also not going to cover today the employee retention tax credit. I will direct you to, if you put into Google IRS employee credit tax, employee retention tax credit, you will get to, the IRS has a wonderful FAQ all about that. And we have put up an article on the subject we have put that up on our website as well, but it really kind of details all of the aspects of that credit. So we're not going to be covering that, but it is another option. All right, so let's turn to the Paycheck Protection Act. The purpose is to keep people employed. That's the goal. And that was the entire purpose. That's why it's called the Paycheck Protection Act, or Protection Program, as part of the CARES Act. The CARES Act covers a lot of different things, but we're talking paychecks here. And the goal was to cover 8 weeks of employees' payroll costs, and then a few other expenses. So you get that loan from a bank. A bank can include, it started out very differently, it's changed a lot, and it's still evolving. But a bank includes not only SBA 7A lenders, but also any FDIC backed bank. It includes credit unions and farm bureaus. And we're going to talk a little bit more about which bank you need to contact and what we know about that. And there's been a lot of issues on that front. So I want to cover that a little bit about that act first and what it covers, and then I'll talk about what's going on with the banks as much as I know. All right, so Treasury did put out a sample loan application, but the banks can put out their version of it. So just know that as well. All right, so what does Paycheck Protection cover? Well, the covered period, as many of you probably already know, is February 15th, 2020 to June 30th, 2020. And that's important. It doesn't go beyond that. Now, would Congress change that if things are still really bad? Who knows? They might. I don't know. The loan is a fixed interest rate loan at 1%. The Act said 4%. At one point, it was 0.5%. But what the SBA and the U.S. Treasury Secretary and the bank seem to have arrived at is that 1%. It was at 0.5, and apparently most of the banks said, we're not doing it. It's going to cost us more than it's worth. We're not going to make anything, and we're not doing it. So they moved it up to 1%. Now, I'll still recognize that for many, it will be loan forgiveness, and that 1% won't apply. But that's not guaranteed, and you have to apply for that forgiveness. In general, you have 2 years to repay the loan if repayment is necessary. The real benefit is that there's no personal guarantee required. There's a lot of the fees have been waived, and there's no prepayment penalty on Paycheck Protection. There's also no requirement that the nonprofit be unable to obtain credit elsewhere. Oftentimes you're getting an SBA loan, you have to show you couldn't get it anywhere else. But that's not the case. You can receive deferrals on the principal and payments for a period of 6 months, but the interest will continue to accrue during that time. Right now, it also has an aspect of the EIDL loans, which we're going to talk about in a minute. So an EIDL loan that you obtained between January 31 and April 3rd may be refinanced as part of your Paycheck Protection Program loan. Even if it's used for purposes outside of what Paycheck Protection covers. But it still would be going from 2.75% to the 1%, which would be a benefit. If you get an advance up to $10,000 through the EIDL, which we'll talk about a little bit later, that will reduce the amount you can get under Paycheck Protection. So you just need to know that they have thought through those issues and have combined that. And that was actually in the CARES Act, and then some of it was in the regulation. So all nonprofits had to be operating since February 15th of 2020. There's been a lot of conflicting conversation around, well, how do you prove that? How do you have any financials if you're that new? And there aren't really good answers for that. I will tell you that right now. And remember that ultimately it's up to the bank to decide if they're going to fund it. Now, as of last night, the federal government, the Fed, came out and said that we will back these loans, which means, and that was also one of the other big issues, was whether or not that the lenders felt comfortable doing these loans and what their risk was. And so they basically created all these certifications in both Paycheck Protection and in the EIDL loans, but for purposes of the lenders, Paycheck Protection, to ensure that these lenders don't feel on the hook. So really, it's going to be up to the individual nonprofit that's applying for the loan to be able to prove the certifications that they're certifying, and it's not going to be up to the bank or the lender to prove those things. And that was really one of the only ways to make this all happen and happen quickly, because traditionally the bank would have to go through and prove that you met all the requirements and determine the amounts. So one of the other things that you have to do is certify and be able to show, and this is the wording, current economic uncertainty makes this loan request necessary to support the ongoing operations of the applicant. So what does that mean? Well, the bank can request evidence of this, and that's frankly up to each bank. The SBA has not put out specific guidance yet as is clear for that. But I will say a lot of the examples that are coming out and are being discussed are things like a fundraiser that didn't happen. And last year that fundraising event raised $50,000. That would be good evidence. You have a grant to conduct a specific activity, and now that there's a shelter in place, you can no longer use that grant money because it's restricted. And maybe that grant is $40,000. Well, you can prove that you no longer have that money to pay your employees. Now, sometimes you can talk to if it's a federal grant or even not a federal grant, you might be able to work with your grantor and see if they're willing to release or reduce those restrictions to allow you to pay your employees and stay in business. If you can, then you don't need to apply. You have to show economic injury and the need to apply for this basically 2 months of payroll costs plus a little bit more. Another way that you would show that you needed it was that you're no longer receiving payment for services. Some organizations, for instance, a counseling organization that gets paid for providing counseling services, even at a very low rate, would still be losing income on a daily basis potentially if they can't provide those services. So those are all reasons, and you have to have that evidence ready for both payroll protection and for EIDL. It applies for both, and we'll talk about it a little bit more on EIDL, but they both are the same concept. And if you don't have evidence of economic uncertainty at this moment, you have until June 30th to apply for this loan. And I know everyone's all freaked out that there's not going to be any money, but literally yesterday in the daily briefing, the President of the United States said, if we run out of money for this program, we will get more money. So on national television. So I do believe that it's in his interest and in Congress's interest to make sure that there's enough money to keep people employed as much as possible. So now of the Paycheck Protection Act or Protection Program funds, at least 75% of these funds have to be used to keep workers and maintain payroll. And only 25% can be used to make mortgage interest, lease payments, and utility payments. And those are the only things that it can be used for outside of payroll payments, is mortgage interest, lease payments, and utilities. And all of those things had to be in place. Your mortgage had to already be in place, the lease already had to be in place, and those utilities already had to be in place by February 15th. So the concern is that people are going to go out and sign up for utilities that they didn't have before and then try to get payment for it. So it had to be there already. You need to, on the application, identify what you plan to use the money for and how. So it's very important also that you identify that between February 15th and December 31st that you have not received duplicate payments under the program. You can't apply for and receive duplicate payments. You should submit one application, and if you get denied, then you can reapply. But you're certifying that you have one application under this program and that you're only looking for this one loan. Okay, so what can you get? You can get 2.5 times your average monthly payroll costs in the year before, and there have been differing statements about what constitutes the year before. Is it April 2019 to March 31, 2020? Is it 2019? The Act said one thing, the regs have said another, and sometimes they're implementing something completely different. You just have to go with whatever your bank is asking for and be prepared. Be prepared to provide all of 2019 information, and then be prepared to provide also the first quarter of 2020 information. And the more prepared you are, the better off you are. And different banks can honestly choose what they want. Independent contractors are excluded for nonprofits applying for this. So if you mostly pay independent contractors, you are not a good candidate for the Paycheck Protection Act. Independent contractors on their own can apply for Paycheck Protection money, and their applications will open on April 10th. But you cannot apply for independent contractors as part of your quote-unquote payroll costs. That is entirely separate, and you cannot include them. And I know there's been conflicting disinformation about that, but that is now very clear. So what can you include? You can include salary, wage, commission, or similar compensation. Now, if you have employees whose combined payroll, and it includes more than just salary, wage, and commission or other compensation. I'll go over what those other things are. You have to take the combined payroll amount or cost per employee. And if you have employees who, with all of those costs combined, are over $100,000, you have to cap it to $100,000. They do not want high income people getting benefits from this program. So you can only use a portion of the funds from this to pay a portion of their salary or their payroll costs. You can, if you have other funds that you can cover that difference with other monies that you have, that's up to you. But these monies, you have to show that you're not going above that $100,000, and it includes the salary, wage, commission, compensation. It includes any payment that you generally and always have provided for vacation, parental, family, medical, and sick leave. And again, remember that paid sick leave is now under that Families First. Allowance for dismissal or separation, which it has to be factored in, but obviously you're probably not going to want to be paying that out from the proceeds. But it also includes the provision for group health benefits, including insurance premiums under that group health benefit. It does not cover individual premiums that you might be paying. It's all about the group health benefits that the organization as a whole is providing. It also includes any retirement benefits, and then also state and local taxes that are assessed on the compensation, which is a nice factor as well. So all of that combined is the payroll costs that you can include. And you have to look at those average monthly payroll costs. I would do it for 2019, and then I would also do it for the last previous year and have those numbers calculated. And honestly, the lender actually does the calculation. So you just list the payroll, average payroll amount and the 2.5%, and they're going to determine the value of your loan. You may not get the full amount. They may decide that they're not giving you the full amount of what you think you can get. So just be aware of that. It's up to that amount. And they're going to look at all the documents you submitted and make that determination. Now, how closely they're going to look at those, who knows? We've got, within the last few days, so it opened April 3rd, the statistic I got this morning was that they had processed 212,000 loans at $38 billion. That's an immense number in a very short period of time. And so they're going as fast as they can. And then I also heard that there's been technical difficulty, and that while the banks have processed that, the SBA has not. And that the SBA has actually reviewed very few of them because there's all these technical glitches in the computer systems and the capabilities between the banks and the government, and everybody being completely overwhelmed. So this is a massive, massive undertaking, and they're doing the best they can. And at the same time, SBA is managing the EIDL loans. So we're all just going to have to try and find a little bit of patience in a time when there is very little patience and a great need. All right, so you get your loan. You have 8 weeks from the date you receive your loan to use that money. And the goal, of course, is to use it in a way that it's all forgiven. Now, it's forgiven. You have to spend 75% of your payroll costs of it on payroll costs, and 25% can be used on that mortgage interest, the rent, the utilities. Now, let's be real about it. If you got the whole 2.5 times your payroll, okay, you got 8 weeks, so it's 2 months worth of payroll. If your monthly payroll is $10,000 and you get $25,000, which would be 2.5 times that, then in 8 weeks you're going to use $20,000 just for your payroll, unless you have fewer employees, which hopefully you don't. Hopefully you have the same number of employees, because you won't get loan forgiveness if you don't. And if you were paying people less for a short period of time because you didn't have enough money, as long as it wasn't below you don't continue that, and you start paying them the full amount that you were paying them before, and you don't have a reduction of 25% or more, then it would be forgiven. But so then you would use that amount, right? The goal is to give you what you need to cover those costs that you had previously. So assuming you use the $20,000 for your payroll, then you've got, a fifth left, which is $5,000, which you can use for in those 2 months, in that 8-week period, to cover things like rent or mortgage and or utilities. And utilities is very specific. Utilities is electric, gas, water, transportation, telephone, and internet. That's what it says right now. Now, whether they change that, I don't know. But right now, that's all it covers. It doesn't cover insurance payments, liability insurance. It doesn't cover any of that. It's utilities. And again, those had to be in place by February 15th. Other things that there are a few payroll costs that it doesn't cover. So like I talked about, that cap of $100,000. If you can't, you've got to make sure you're protecting that cap. It doesn't cover any employees outside of the United States. It also doesn't cover U.S. federal taxes that you would be paying during those 8 weeks for those employees. You still got to pay that. That's not forgiven. And then also, if anyone's under that Families First Act, that's not going to be covered as well. You can't double dip, as I mentioned before. So the key is, if you've used the proceeds in the 8 weeks for the right things, your loan should be forgiven. But at the end of that 8 weeks, you have to submit meticulous records as to how you use that money. You have to show that you kept the number of employees that you had in 2019 or in the period 1 year before, depending on which way the bank is looking at it. And then you have to, if you did reduce it, you may lose some of your loan forgiveness. And the key there is the date there is February 15th, 2020. So if you had fewer employees that you had on February 15th, 2020, that's the date they're supposed to be looking at. Some of the applications have looked at it a little differently, but that's the date that it's supposed to be. So if you had 10 employees on February 15th of 2020, during your 8-week period, if you had 9 or 8 or less, then you will lose some of your loan forgiveness. The goal, again, is to keep people employed. So if you had to let them go, rehire them if you can, so that you're back up to that number. Or if somebody happened to leave because they just left, because they quit, because it just wasn't working out and it had nothing to do with COVID-19, hire someone new, employ someone. God knows we need people employed in this country right now. So, try to do whatever you can to have those employees. If not, all it means is that small portion you'll have to pay back to the government, and you'll pay that 1% interest on that amount. So we have calculations on this on page 6 of our article, so please refer to that for more detail on that. The other piece of that is the 25% reduction in salary, which I think I've already covered. So you have to provide really clear documentation to the lender that proves all of these costs. You have to verify the number of full-time equivalent employees on payroll, the dollar amounts of the payroll costs, the coverage mortgage interest payments, the covered rent payments, covered utilities for that 8-week period. And you need to be as detailed as possible. Some people are recommending that people actually open a separate bank account to track this money. If you're used to working with restricted grants, then you know how to treat this. Treat it as a restricted grant and really track every dollar and make sure you've got evidence of it, because you need to submit that. And the lender will then submit it to the SBA, who will then ultimately approve the amount of the forgiveness. It will be a process. It's not going to be obvious. It's just going to take some time. You're looking at already 212,000 approvals, and that's just at the beginning. So you're going to have a lot of people there submitting a lot of information, and a government that is substantially smaller than it was 15 years ago. So we're all going to have to be a little bit patient on that. But I can't stress enough how detailed your record should be. Anything that's not forgiven, the 1% interest will apply, which is still a really awesome deal. And you have 2 years to repay it from the date you got the loan. Now, PPP, or Paycheck Protection Program, is available until June 30th. And as I've said, you apply to your bank. You're going to you should apply to your bank. I didn't say that before. But the recommendation is to apply to your bank. And you should apply online. Some of the banks have already put out their applications. Some of them are changing the application for nonprofits. They're all different. The standard application that the SBA put out addressed these issues of ownership and made it clear that if you were a nonprofit 501c3, you just check that box. And then where it says sort of the main person, it actually has been changed to just list it says you can skip the applicant ownership part where it says list all owners of 20% or more. You don't have that. And they'll know that when they see that you checked 501c3. And so you just complete the application. The EIDL application also has been changed and is now all online, and it addresses the issue as well. It has owner agent. And in that case, the executive director or CEO, CFO, COO of the nonprofit are all considered agents of the nonprofit, and you do have to list their information. All right, so as I said, yesterday the president said in his briefing that if the money runs out, it will be replenished. There have been lots of mixed messages. Like I said, there's lots of technical difficulties. Wells Fargo came out and said that they hit their debt ratio limit. And that debt ratio limit was put into place after the financial crisis in 2008. And basically, banks are limited in how much they can loan. Well, the Fed is stepping in, apparently. I don't know if that's happened quite yet. And they're going to back all these loans so that hopefully this will be resolved very quickly. Again, though, we're going to have to all be patient. And the banks can prioritize who they want to give loans to first, however they want. They're mostly going to be focused on clients. And if you've gotten a loan from the bank before, that's going to help you, believe it or not. But they're going to look at your ability to repay that loan and those sorts of things. It's unfortunately going to take a bit of time. And I don't have a crystal ball to tell you how quickly these loans are going to be processed or when they will grant you one. The lenders, I believe, are doing the best that they can. And the SBA, I believe, is doing the best that they can as quickly as they can. This program went live 5 days ago. And they've given out $38 billion apparently already. That's a lot. And I do think they're working as hard and as fast as they can and trying to do it within the limits of what's legal at the moment. But we are in a national crisis and a national state of emergency. And so things can change rapidly. So I know many of you need this money now, but unfortunately it may take a few weeks. And frankly, if you don't have evidence that you need the money now, that you've lost revenue, it may be better to wait and apply later when you can show that. I do think you should consider contingency plans to the Payroll Protection Program. If you need money really quickly, things like, unfortunately, temporary reductions in staff or furloughs, reductions in wages. You may need to help them file for unemployment, and we covered that in a previous webcast, so I'm not going to go into that now. And we do have articles on that subject as well, I believe. But until you can kind of get the money and rehire people, and you may want to apply for an EIDL grant, and then there's also the economic retention tax credit, which is very limited, but it is an option. And the IRS has a wonderful FAQ on that, as I mentioned before. So if you're thinking about reducing staff or doing some kind of furlough, please reach out to your Pro Bono Partnership of Atlanta attorney, and we can try and help give you some advice and counsel on that. As I said before, consultants, independent contractors, and business owners that are not 501c3s are not who we're focused on today. Actually, I don't know, it's what Lori said. So please understand that the questions, we received a bunch of questions on those subjects, and we won't be answering those questions. I said before, applications open April 10th for independent contractors. And business owners, small business owners that are for-profit can apply now for Paycheck Protection Program. But we focus at Pro Bono Partnership of Atlanta on 501c3s, and that's going to be our focus for this presentation or webcast. And with that, I think we have some questions that were
Yes, Robin,
raised earlier.
We have quite a few questions on the PPP part of the presentation, so I'm going to go ahead and ask you those now, and then I know you're going to move into EIDLs, and we'll ask questions after that. So let me start with this question. If a nonprofit employs only part-time 1099 contractors, can it get the PPP money?
No, it can't. Contractors have to apply separately. You could, as an organization, consider an EIDL loan, which I'll discuss shortly, which may help you with other costs.
Can you go over one more time what is included in the payroll when determining if someone makes over $100,000? We got several questions about that.
Yeah. So all of the specific information that's applicable to an individual that I described as payroll costs, that includes the salary, the vacation, the group health insurance, everything I talked about before, and it's all in our article, details about that. You add that all up, all those benefits. And let's say a person, when you add that all up, maybe their salary is 100 and you add in all the benefits and it's 120,000. Then you have to, in terms of determining their payroll, cut back the amount that you pay them during that 8 weeks out of payroll protection money to up to what would be a total of 100,000 in a year. So you would take the 120, go down to 100, and then you divide that out by your payroll amount, and then you pay that. And you have to be careful not to obviously include the federal taxes, but you have to reduce it by that
Robin,
amount.
you would still pay that
Hopefully
person
that
their full
explains.
salary, but it wouldn't all come out of the PPP money. Is that right? Yeah, if you have it.
If you have it to pay, you would. Now you got to be careful too, because if you're reducing salary by 25% or more, then you could lose forgiveness. Even though you can't use that money to pay those people the full amount, you could still lose forgiveness. So yes, you can prorate the amount for a person who makes more than $100,000, and you can pay them a portion of the amount up to that $100,000. You just have to make sure you're covering all those payroll costs. Treasury provided 4 really good examples for how to calculate some of this, and we put those in our article, the latest version of our article. So I do highly recommend that you look at those.
Great.
They were really
if
helpful.
I have fewer than the number of employees that I normally have due to non-COVID issues, like people resigning or anything like that, can I take less money in my loan and still get full forgiveness?
No, you can't. I mean, you no matter what, forgiveness is based, so the application and receipt of the loan is one thing, and that's a separate calculation. And then the use of the loan is the different calculation, and the forgiveness is based on the use of the loan. So the two are kind of, to a certain extent, almost separate. And you have to look at your employees that you had from February 15th, 2020, and if they're fewer, now, like I said, some banks are looking at that a little differently, but whatever that date is, if you have fewer than that, you just won't get the forgiveness for the loan amount that you got, regardless of the amount. It's based on keeping people employed. And so if somebody left, or like I said earlier, somebody didn't work out or whatever, try and hire someone else by June 30th, which is the deadline. Although it does appear that it says June 30th is the deadline, but if your 8 weeks end before June 30th, I think you would probably have to have them hired before the end of your 8-week period. But that's not clear, but it's just logical.
How do you determine who the FTEs are?
So it's your full-time equivalent employees. So if you have several part-time employees, you determine and you add up to the 40-hour-a-week standard. Now, if your full-time equivalent is less than that, then it's whatever your full-time equivalent is. So if you don't have any full-time employees, then you would have to pick what a full-time employee amount would be. But if you're average, let's say somebody's considered full-time at 32 weeks, but mostly it's, you have to look at, is it 32 weeks, is it 40 weeks?
Right, Robin?
And then you take your part-time people and maybe, sorry, hours, yes, hours, not weeks, hours. So you look at their hours, is it 32 or 40 or whatever it might be 35 to be full-time. And then you take your part-time people, and if they're hourly, you determine the percentages and you add those together.
For the financials for the application, what if I only have Form 990N? What can I submit for financials?
So you can submit your last 3 years of financial records. They're trying to give you as much leeway as possible to submit whatever information you have, and that will be acceptable.
Is it acceptable to use the funds that I get from the PPP loan for liability insurance premiums?
You can use it for that, but it will not be forgivable. And it's not expected that it would be used for that purpose. That's where an EIDL would come in, which we're going to talk about soon. That might be another option for covering some of your other
Okay,
costs.
so if I use, in general, if I use the PPP loan funds for anything other than those specific items for which it's allowed, I won't be able to get forgiveness, but I can do that. I can use it for other items.
That's not exactly clear. I mean, it's supposed to be used on those items, but because that's what you're applying for. So I don't know. And you're certifying that you're going to use it for those items. So the goal is to make it forgivable, but I would try to use it on those things that they list. It will definitely not be forgivable if you use it on anything else.
How does the CARES Act loan impact a nonprofit who receives a large amount of federal money?
It kind of depends on what federal money you're receiving and how you're receiving it. Is it restricted? And so you kind of have to look at what those federal dollars are and what they're for. There's nothing in the act that says that if you're receiving those federal dollars that you can't apply for a Paycheck Protection Program loan or grant. But it also begs the question of, if you're getting that money, do you need Paycheck Protection? If that money is coming in and able to be used ongoing, you might not need.
Great. What if our grant money requires a 25% match and our fundraising events were canceled or maybe canceled, limiting our ability to raise the money?
So if an event has been canceled and it happened in the past, then you have evidence of about how much you made. And so you can show loss of revenue, which is great. You can use that to demonstrate the need for a PPP as well as an EIDL grant or loan. In the event that an event hasn't been canceled yet, you might want to wait to apply for your Paycheck Protection Program grant. The money is supposed to be there till June 30th. And so, you may want to wait until, if that event, for instance, is scheduled for August or September, you might want to wait until June to see if it's still happening. And again, it technically does apply until June 30th. Could that change? I suppose, but I think the president was adamant that there would be more money.
I was planning to convert an independent contractor to an employee this month before the crisis hit. Can I do it now and have that person covered under the loan?
You can do that. You can do that anytime. They want people employed. If you have more employees, they're happy with that. But you're not going to get more money for that person. The amount is based on either 2019 or what you had through the date of the application, depending on what the bank is looking at and how they've decided to structure it. So you won't get more money to cover that person's payroll costs, but you certainly could use it for that person. Absolutely. But they have to be treated as an employee.
Can I use the funds to pay employees who aren't actually working?
Sure. I mean, if you are in a shelter in place and your business is non-essential and you have nothing for them to do from home, you can still pay them. And that's part of what this is about. And to keep people on the payroll during this time so that once you reopen, you can reopen and be ready to go.
What time period will be considered for payroll and other expenses for forgiveness of the loan? We have an employee who's planning to leave in July. Will that put us at risk for the loan not being forgiven, even if we want to continue to employ and pay that person for the next 3 months?
So the time period is the 8 weeks upon receipt of the loan. And that's what they're going to look at, and how you use that money and what your employee count was during that 8-week period. It says through June, you have to rehire through June 30th. But if your payroll count was the same as what it was in the prior year during that 8-week time period, it should be okay. I can't say that 100%. They could change it and say, nope, we're looking at your employees as of June 30th. But even then, you would be fine under this condition. Now, if you don't apply until June for the Payroll Protection Act, that could ultimately mess that timeline up, because if you got the loan June 1, you'd have 8 weeks to use it. So you just need to think that timing through.
If some employees are federally funded, can you use the PPP funds to pay your payroll while you're waiting for the federal reimbursement? Or would that be considered supplanting the federal funds, since 75% has to be used on payroll?
Honestly, this question makes me think that this organization really doesn't have a loss of revenue. You're getting reimbursed from the government for your expenses. And so you have to show a loss of revenue to get payroll protection.
Is it acceptable and advisable to apply it? I think you already answered this one, actually, Robin. You said to apply to your own bank, not to other banks if you can, right? So you wouldn't want to apply to more than one bank, only one bank.
Yes. Right. Frankly, what I'm hearing about the banks is that they're only considering their clients. They're prioritizing their clients in their own individual ways. Like I said, Wells Fargo had run into an issue with their debt ceiling, and that was from the financial crisis of 2008. Supposedly, the Fed is stepping in to rectify that situation. We'll have to see what happens over the next few days. I think banks are trying to prioritize and process as best they can through this. And if you get denied from your bank once, that doesn't mean, or I don't even know that you'll necessarily get outright denied. You may just get pushed back, and they might say, we'll look at this later. And you should just keep going back to your bank. But it's highly unlikely that you would get it from another bank at this point, because just of the volume. And they need to have some knowledge of you as a business.
Just a couple of other questions to the EIDL loans, because I know that we're getting short on, we're going to go past 4 o'clock for sure, but I want to make sure you have enough time to talk about that. One other question: if you increase your staff as due to the COVID emergency, if you're in an organization where your staff is growing because the need for your services is larger, can you use the funds to pay for your increased staff that you get from the PPP loan?
Yeah, you can always use it for more. You won't necessarily get more, unfortunately, because they're going to look at your average payroll for the past year. Now, there are seasonal employees, and if you had hired, which probably you didn't for COVID yet, but there is an option to do like January 1 to February 20 something. And I haven't paid that close attention to the seasonal employees, but there is an option to look at the employees during that period of time. It's a short period of time. If you had seasonal employees, if that would help you in your numbers, that'd be great. But my guess is you're ramping up now. So you wouldn't get more, but you could apply for an EIDL and use that for payroll as well. It isn't forgivable, but it would help you.
So you can get both a PPP loan and an EIDL? You could apply for both?
There's some discussion that says that you can't, but there's nothing anywhere that says that you can't. They have to be used for different things. The EIDL is if you're getting the Paycheck Protection, you must use that for the payroll. If you get an EIDL, you shouldn't be using that to double dip on that payroll. You can use it though for things like rent and not just the things that are limited to Paycheck Protection. And we're going to talk about what can be covered in the EIDL, but it includes ongoing business expenses. So it could include that insurance that you need covered. It can include a lot of other things, but it's not forgivable. But I will tell you, it's at a rate of 2.75% to be paid over 30 years. That's an amazing rate. And if it would help you get through this time period and you think ultimately you can repay it, that's great. There's also a forgiveness or a period of time which you don't have to pay anything on it. Interest accrues, but you don't have to pay the principal for at least 6 months to help us get through this time period. So there are some people out there that are saying that you can't get both, but there's nothing that says that. And the one is through your bank, and the EIDL is directly through the SBA. And so it's a different program altogether.
Great, Robin, why don't I let you go ahead talk about the EIDL at this point, and then I'll come back with more questions at the end when you're finished talking about the EIDL.
Okay. So, so to that point, if your expenses are not so much payroll, but you have a lot of independent contractors or ongoing business expenses, then EIDL might be the way to go. And that stands for Economic Injury Disaster Loan. And this is not a program that is new from the standpoint of being available to businesses. This covers things like tornadoes, Katrina, other things like that. And it's been around for a long time. And so the disaster was declared, I believe it was March 15th or 17th by the president to create a national disaster. And so that's when these funds started to become available. Like I said, there's no loan forgiveness, but they're very favorable terms. And there's nothing that says that you can't apply for both. So let's talk for a few minutes about what this program is. Like I said, it's directly from the SBA. It's right on the SBA website. It's a very short application. Originally, there was a longer application out there, and then they took it down, and then they put up something else, and then they took that down and put up this. It provides working capital loans that cover fixed debts like mortgage, rent, interest payments, payroll. But again, if you get payroll protection, that's where your payroll is going to come from. But remember, payroll protection only covers 8 weeks. So if you use all that money, then you can use it for payroll further down the road. It also covers accounts payable. So essentially anything for ongoing business activities. The loan is limited to the amount of your revenue that's been reduced since the disaster. So since March 15th or 17th. So if your revenue was $300,000 a year beforehand, and after the disaster, your revenue is down to looking like $100,000, then the loan amount you could potentially get is $200,000. The loan cannot be used to refinance long-term debts or expand your business or to make infrastructure improvements. And it's not intended to replace lost sales and profits, but to keep your nonprofit afloat during the disaster. So it's geared towards covering your immediate needs for the immediate future. Again, going back to that example I had before about the fundraiser. If your fundraiser was scheduled for April 3rd and it didn't happen, and you last year made $50,000 on that, you've got evidence that you have reduced revenue. So if you know you're going to have future evidence of that, once you know what that evidence is going to be, anything that's been canceled, any grants that have been denied or withheld, any grants that can't be used because you're not operating, all of that can be added up to lost revenue that you can apply for. Again, the loan can be as much as $2 million, but the SBA determines the amount. You don't request a specific amount. It's up to them to decide. There's no collateral or personal guarantee if the loan is $200,000 or less, which is huge. To get a loan at 2.75% for $200,000 with no collateral or personal guarantee. And that was through the CARES Act, that change. Because normally through an EIDL, you do have to do that. There's also no requirement that the nonprofit be unable to get this through a credit anywhere else. You have to be in business for at least 1 year for the EIDL program. And there is no forgiveness on this loan. Now, nonprofits must originally it said through the end of the year that you could apply for this loan, but if you actually look at the SBA application online, the deadline is now September 30th. So like I said, it's a constantly moving target, and that's what the new deadline says on the application page itself. It's not written anywhere else, it's not in any regulations, but that's what it says. So you want to list the amount that you need based on the date in which you apply. Like I said, you can defer your loan payments for a year, but interest does accrue. And the SBA can approve. The SBA can actually approve nonprofits for small dollar amounts solely on the basis of the organization's credit score, or This is what it actually says, alternative appropriate methods to determine an applicant's ability to repay. They're trying to get this money into your hands to be able to stay open. Now, if you got payroll protection, you have to use it for payroll, and you can't double dip with EIDL. But like I said, you can use it for these other costs. The key date on the application for the EIDL is January 31st, 2020 as your measurement date. So they're going to look at, so I said before March 15th, it's actually January 31st. So income, expenses, and number of employees on January 31st. And that's just on the application. So that's just the date that they happen to pick on the application. It's not necessarily tied to what is traditionally in the regulations. Like I said, the form is very basic. It does ask and say that you're not eligible if you're in the business of lobbying. 501c3s are not in the business of lobbying, or they wouldn't be 501c3s. You can only do a limited amount of lobbying, and it's not a substantial portion of what you do. Otherwise, you'd be a C4 or a PAC or something else. So you can check that as a you're not in the business of lobbying. There is an organizational type, and you're going to click other for that unless you're faith-based, and they put in some provisions for faith-based organizations that you'll see. Your ownership percentage is 0. Your business activity, for most of you, you're going to list miscellaneous services. The detailed business activity, you're going to put none of the above. And then, like I said before, for owner agent, you're going to be considered agent, and you're going to list your CEO, CFO, CEO. You can actually list your accountant if your accountant's willing. You have to identify if anyone uses a broker or anyone to help you complete this application, and in particular if you paid them, you must list that information. They're trying to make sure that people aren't taking advantage of these businesses and getting a fee for helping with these applications. You can check a box to be considered for an advance, and it's up to $10,000. I think a lot of people for a while were thinking it was just $10,000, and I think there was even some language or wording that originally it was just a $10,000 grant. But it's really up to that amount, because they could choose not to give you or give you just a small amount. And that becomes a grant. So that's that advance quick money. It says you'll get it within 3 days. I think it's probably more like a week or maybe even a little longer. You just have to be patient. It's not clear how quickly they'll be able to process that money. And even if they don't give you the loan, you can get that grant amount, whatever that amount is, up to $10,000. And it's considered a grant. Now, if you get payroll protection and you get that advance, then that advance is part of your forgiveness. So it's included in that and will reduce the amount of your payroll protection monies if you apply after you get that advance. And they have to be rolled together. It's not 100% clear how they're going to figure that out and work that out. But if you apply for payroll protection after you get that advance, you need to make that clear. You also have to describe your EIDL loan that you get as well. That doesn't mean that they won't give you money, especially if you explain what you're going to use that for, but it could have a factor. Some people have said, oh, can we just apply for the $10,000 and get the money? And well, first of all, you're not guaranteed of $10,000. And then, if you get the grant, the loan, it's not clear whether you can just say, no, thanks, I don't need it. I really just wanted this grant. You might need to take the loan, but you could always repay it very quickly and not incur the debt. There's nothing that's come out on that quite yet. I think they haven't thought through all the ways that this could go. That's really all I have to cover on the basis of the EIDL. We do have more information on that in that article on EIDL, and the 2 webcasts by Barnes and Thornburg covered it.
And Robin, I have some. Oh, sorry.
One thing I do want to mention that I forgot to mention earlier when we were talking about payroll protection, and that was PEOs. So a lot of questions have come up about PEOs and how you can do payroll protection if you have a PEO. You should be able to get a letter from your PEO that shows that you are a co-employer, and they have a specific schedule that they have to submit to the IRS that lists all of the businesses that they are a PEO for and the amounts per 941 that that would apply to each business. So they have to document all that, and they have to submit that to the IRS. So the IRS does have that information and can connect you to your amount. Take a little bit more effort, but they can do it. You also can submit your bank statements to show that you paid those salaries and you paid those costs. So you definitely should still be able to apply for a Paycheck Protection program loan or grant if you have a PEO. And I meant to mention that earlier. Sorry, Lori.
Sorry, I was muted there. No problem. Thank you, Robin. I have a few more questions for you, so I will run through these questions. First, with regard to the EIDL, how do we show loss of revenue?
It's the things I've already kind of identified. Like I said, the fundraiser that didn't happen, the grant that you can't use, all those sorts of things I've pretty much already covered. And then again, if you receive federal funding, is it worth it to apply for these grants? And I think I've already kind of covered that. It's going to depend on what that federal funding is for and how you use it. And if you're not losing that funding because of COVID, you probably won't be eligible for these funds because you have to show revenue loss. Lori, are you on mute?
Sorry, I didn't do that. Okay, sorry. Is there any help for a nonprofit in the middle of a lease agreement that's almost near completion? What loan should a nonprofit with no employees apply for in reference to things like leases, utilities, and operating costs?
If you don't have employees or you mostly have independent contractors, you want to be applying for a loan from EIDL. It does, like I said, have that interest rate, but that's your best option.
Okay. I completed the EIDL, but I didn't receive an email confirmation. I have a confirmation number. What happens next? Do I need to reapply if it's been a couple of weeks?
If it's been a few weeks, you might want to go back in. It couldn't have been well, I guess you could have applied a few weeks ago. The new application just came out online in the last last Friday. So if you mailed an application, you might want to redo it. But you'll need to somehow explain that because there is a customer service line. You might want to try and get through on that. It'll be really hard. Because you don't want to have two applications in at once. But if it's been a few weeks, that's pretty unusual because really the applications ramped up in the last week. They are overwhelmed, and like I said, they're doing the best they can. I don't know how long it's going to take in general.
Okay. Who makes the final SBA loan approval decision? Should we get a pre-qualification from our bank or a local SBA decision maker?
So for the EIDL, it's directly from the SBA. There's no point in going to a bank at all whatsoever. It doesn't involve a bank. Your PPP has to go through a bank at this point in time.
Okay, I have a few more PPP questions for you. First,
okay.
With regard to the 75%, 25% split that you have to have for forgiveness between payroll and other amounts, is that based on the amount you're loaned or the amount that you spend? So if you spend a different...
It's based on the amount of the
okay.
loan.
Yeah.
Like whatever amount you receive, you're expected to spend that in 8 weeks on those items. So And so you're actually getting 2.5 times your employee amount that you would need to cover payroll based on history. So you have 0.5 to use on other things. But you're supposed to spend that in that 8-week period in order to get the forgiveness.
Great. Do you have to spend the loan?
The regulations don't really cover. Sorry, the regulations don't really cover what happens if you don't spend it in that 8 weeks, other than that it converts to a regular loan.
Right, you wouldn't be forgiven. Right?
But you are certifying to a whole bunch of things in the application that you're going to use it for these things. So you need to really make sure you're living up to your certifications in your application.
Can you use the PPP funds for payroll that's occurred prior to receiving the funds, or only after you get the loan?
It only counts for upon receipt of the loan for those 8 weeks at that point. That's when the clock starts.
Okay. What proof or documentation do we need to show our average payroll expenses, or FTEs? Can we use our last end of the year employee detail register from payroll and our 941s?
Those would be good things to use. It's going to depend on each bank as to what they want to see. But definitely those would be a great starting point. All your 941s and your paycheck register. I think those are great options. But remember, you need all your payroll costs. So you need to consider those aspects of it as well.
Will booked assets reduce our eligibility if we've lost income during this period?
I can't answer that. It's going to be up to the bank to make that decision as to what they think. If you've got fixed assets, that's not going to help you through this time, but it's going to be up to the bank to decide.
Okay. And are public and private nonprofits eligible for PPP and EIDL?
So this question confused me a little bit. I will say that private nonprofits, from the standpoint, are public charities. So when I think of a public nonprofit versus a private nonprofit, there are two different things to think about. Public nonprofits that are governmental, because some 501c3s are created to assist the government, would be a public 501c3. Those are probably ineligible because they're actually like governmental entities or related to the government. But whether you're a private foundation or a public charity is a separate issue, and certainly 501c3 public charities are eligible.
Great. If a grant we've received that we plan to use for operating costs like rent is no longer allowing us to use the funds for operating costs because our program is closed, is that a loss in revenue that might qualify us for one of these loans? So
yes, absolutely.
Yeah, that we can't use. Mm-hmm.
Yeah, that's exactly what I was talking about. If you can't use your grant money because you're not operating and they won't allow you to use it to cover those kinds of costs, then that's exactly when would be a loss of revenue that you had counted on and had in hand.
Great. Well, thank you so much, Robin. I think the remaining questions were answered earlier, so I'm going to refer folks back to the recording, which we're going to distribute tomorrow, to get the remainder of your questions answered. If you have a question that wasn't answered, please feel free to contact your pro bono partnership attorney, and we will do our best to get an answer to your question as quickly as possible. Robin, anything else before we wrap up?
I just want to say that I'm so sorry everyone's going through this. It's a difficult time. If I had a magic wand, it'd be wonderful, but I don't. And I think, unfortunately, in a time where it's not easy to find patients, we just need to really dig deep and find some, and hope that it all works out. And if we can be of any help at Pro Bono Partnership of Atlanta with making these kinds of decisions, we don't complete these forms. That's a business activity, but we can certainly help sort of guide you in what your options are and maybe what things to consider. And just know that there's going to be things that aren't going to be what we expected or even what we've said today, because everything is changing quickly. And good luck. And thank you for all that you do.
Thank you very much, Robin, and thanks everyone for attending today.